Imagine a scenario where a Chinese company, not Tesla, is leading the electric vehicle (EV) revolution in Europe. This isn't science fiction, it's the reality being shaped by BYD, a Chinese EV manufacturer that's rapidly gaining ground on the global stage. BYD's ambitious expansion plans in Europe signal a significant shift in the automotive industry, one that could redefine the future of transportation on the continent and beyond. In the heart of Europe, specifically in Szeged, Hungary, a sprawling industrial site is being transformed into a hub of EV production. This site, once a humble wheat field, will soon house a state-of-the-art factory that will churn out 150,000 compact electric sedans annually, starting in 2026, with plans to double that number by 2030. The factory's presence is a bold statement of BYD's intentions to dominate the European market, a move that has sent ripples of concern through established automakers like Tesla, GM, Toyota, Ford, and Volkswagen. BYD's rise to prominence is a story of strategic foresight and relentless innovation. The company, which started as a battery manufacturer in 1995, has evolved into a global EV powerhouse. Its founder, Wang Chuanfu, an engineer who overcame personal adversity to build an empire, recognized the potential of electric vehicles before many of his peers. BYD's vertical integration, from battery production to vehicle assembly, has given it a significant cost advantage over competitors, a fact that hasn't gone unnoticed by industry analysts. The company's success in Europe is not just about numbers, it's about disrupting the status quo. BYD's entry into the European market is facilitated by its ability to produce vehicles at rock-bottom prices thanks to subsidies from the Chinese government. This strategy has allowed BYD to triple its sales in Europe between January and May of this year, capturing a tiny but growing 1% of the regional market. The company's aggressive expansion is led by Stella Li, BYD's executive vice president, who is spearheading the company's global push and serving as its public face outside China. BYD's playbook in Europe is a departure from its traditional strategy of tight supply chain control. By establishing a foothold in Hungary, the company can avoid tariffs that would otherwise hinder its growth. This move is part of a broader trend of Chinese automakers seeking to gain a competitive edge in the European market. However, analysts warn that BYD's rapid expansion, which has involved mounting debt and a willingness to forego short-term profits, may not be sustainable in the long run. Despite these challenges, BYD's presence in Europe is already making waves. The company's new flash charging technology, which allows for 250 miles of drive time for every 5 minutes of recharge, is a game changer. This, combined with BYD's 1 millionth Seagull hatchback and the launch of its God's Eye driver assistant software, positions the company as a leader in EV innovation. BYD's success in Europe is also a testament to its ability to tap into the region's talent and networks, effectively co-opting the very industry it aims to disrupt. As BYD continues to grow, it's clear that the company's impact on the global automotive industry will be profound. BYD's rise challenges the dominance of traditional automakers and highlights the potential of Chinese companies to lead in the EV revolution. Whether BYD can sustain its breakneck pace of growth and thrive in the face of increasing competition remains to be seen. However, one thing is certain: the future of the automotive industry is being rewritten, and BYD is at the forefront of this transformation.